Hello everyone, my name is Oscar and my team members are Frank, Vanessa, and Stacy. We were assigned to do a project on Trak. Trak in the first place is an online simulator where people without knowledge on investment or trading transaction can invest and gain experience on hand. We were given 10 weeks to invest from February 12th until April 12th. On Trak, we were given an amount of $100,000 in cash, an additional $200,000 to invest on total.
Our group was new to investing and gained a lot of experience by using Trak. We decided to adopt a risky strategy in order to gain the most returns. Beta is a measure of a stock's volatility in relation to the overall market. It is most often calculated using a stock's movements relative to the S&P 500. Stocks with a beta that is greater than 1 tend to be more risky. Most of the stocks our group chose had very high betas. The majority of our portfolio consisted of companies in the pharmaceutical industries. The stock that made us the most money was Arcadia, which brought in more than $20,000. Another stock that brought in good returns was Innovative Biopharmaceuticals, which made over $10,000. Overall, our group did very well, bringing in a total of $32,268, which is almost a 33% return on investment. Our aggressive investment strategy worked out and got us second place out of 646 groups.
The first week we did not invest in any stocks because the stock market was down. Dow Jones and S&P 500 had dropped dramatically. As the market started to rise again, we started investing in the second week of the challenge. We invested in Google, Berkshire Hathaway, Amazon, S&P 500, and Apple because we believe that they would be less riskier, giving us a chance to get comfortable with Trak and investing. We also decided to experiment with the short proceed NASDAQ. We sold these stocks in the same week, gaining a small profit. After our trial run in the second week, we decided we wanted to take a more aggressive approach and invested 5,000 shares in Sosana Pharmaceutical and 2,500 in Acorn Incorporated. Because we've seen they lost a lot of money when the market crashed, and as they were gaining, we thought they would be good to buy. The fourth week, we bought 2,600 shares in Innovative Biopharmaceuticals and 20 shares in Netflix. During week 5, we bought 1,550 shares of Blue Links Holdings Incorporated. It was part of the biggest movers on the Benzinga website, and so we invested. We sold 2,500 shares of Acorn when we seen that the market had spiked and thought it would be best to sell it. We sold all shares of Blue Links Holding, and we sold all shares of Innovative Biopharmaceuticals because we seen they were not making too much. We then bought the 2,400 shares of Arcadia Bioscience because we seen they were coming out with a new patent. This ended up being a great idea for us. We bought 5,000 shares of Daxor Corporation because we thought it would go up to $17, but at the end of the week, we sold all shares because instead of going up, like we hoped, it went down.
On week 6, we took a risk on a rising stock named KBS Fashions by purchasing 11,000 shares. Projections showed maybe a 50 cents return on shares, but the market took a bad turn, and we had to wait till the stock returned to make a profit on that stock. Week 7 showed potential with a purchase from Innovative Biopharmaceuticals, and we made a pretty good profit from that stock. Week 8, we bought more risky stocks and held and tried our hand in a few more than the number of stocks that we usually buy. Week 9, we sold all the stocks we bought except Arcadia Bioscience, and the last day of stock predictions were correct, and we made a profit.
This project has taught us a lot about investing and how the stock market works. The market has fluctuated a lot in the past 10 weeks, but we were still able to turn a decent profit. Sometimes you have to step out of your comfort zone to realize significant gains. And as Robert Arnott once said, in investing, what is comfortable is rarely profitable.